Okay, well, we are coming to the end of February, and we have seen positive performance for the Canadian and American markets. And actually, after some positive performance in January, we wanted to highlight what typically happens in years where you have a good 1-2 punch to start the year. CFRA research put together some numbers on this. They found 21 examples in the U.S. since 1971, and in all of those examples, 100% of the time, the year overall is a positive one for the S&P 500. Now, you might say, well, hold on a second. If you've got a positive start, does that mean you have positive performance through the next 10 months? Not always the case, but that same research found 90% of the time, it is a positive trend in those final 10 months, and the average performance in that period is about 13% higher. Now, that's the U.S. market. We keep talking about the S&P versus the TSX, but I was just looking through our Bloomberg data at the last 10 examples of this happening, going back to the year 2000, and you have seen positive performance for the year overall 80% of the time, and then in those final 10 months, you do see positive performance 60% of the time. Jerome Hass is back with us now. He's a portfolio manager at Lightwater Partners. Just like to share the stats with the people because I think there's a lot of, it's interesting. There's a lot of uncertainty in the air. It almost feels like people are uncomfortable, particularly with that S&P 500 rally, like something's going to break here. And yet there's a lot of historical evidence supporting more momentum for stocks. What do you make of those stats?
Well, it's interesting. I'll be honest, as a firm, we hate January. The January effect always kills us. And the reason for that is that people still tend to do their tax loss selling in November and December. And then they have to wait 30 days, and they buy them back in January and February. And so the poor quality stocks tend to take off in January and February, and we tend to be short those names. And so it always hurts us in that. Conversely, this year, we actually had a good January. We were up about 4%, which is rare for us. And so I'm not really sure what to make of your stats there, other than the fact that momentum builds on itself. People like the feeling of markets going up. I think this market feels like it wants to go up. And for that reason, it does go up.
And, technology, we keep talking tech this, tech that. The technology sector in Canada has continued to gain ground this year, as have the tech stocks in the U.S. I'm listening to what you're saying, and it sounds like there might be some targets for your short portfolio of those big rally names over the last couple of years.
Yeah, no. I mean, you get tired of fighting against the NASDAQ and the Magnificent Seven.
Yeah.
I looked at the NVIDIA before the earnings came out, and I'm like, they can't possibly meet the expectations they have, and they did. So I was glad that we didn't put a position on against that. But at some point, when you got such a narrowly based rally, something has to give.
And so what would be in terms of being long versus short, how would you, what's your makeup right now?
Well, we pulled in the shorts a lot, to be honest. We just have a sense the market really wanted to go up and has gone up. On the other hand, we have a lot of names in the portfolio that we think are generally uncorrelated with the market anyways. And so there's less of a reason for us to hedge that. And particularly when you're talking about the tech names in Canada, once you get beyond Shopify and OpenText and Descartes, there really is a disconnect in that the mid-cap stocks really had a terrible year last year in Canada, and the small caps too. And so while we were all focused on the mega tech names in the US, the small caps really had a bad year last year.
And so you're seeing basically you're seeing long opportunity because of a market that pays a lot more attention to certain names versus others.
Yeah. The other is that we're kind of annoyed with the Canadian tech, small cap tech to begin with, and so we've stayed away from going back into some of those names.
Annoyed why?
We got tired of losing money.
Oh, just because of that same trend, the thing you were thinking about heading into NVIDIA results.
There really has been a disconnect over the years, and investors have pulled money out of the Canadian mid-cap market and said, well, why don't I just buy NVIDIA? Why do I need to fool around with stock picking in Canada?
Right.
So, it's not great for the Canadian market per se, and to have that concentration in the U.S., I don't think is very healthy for the U.S. market either.
All right.